Hey guys, Nick here, and in today's video, we're going to talk about why getting a big tax refund isn't necessarily a good thing. So what getting a tax refund essentially means is that you paid more money to the government than you should have for that tax year. Most people with employment income get tax withheld each paycheck, so we're paying taxes little by little over the course of the year. At the end of the year, when we file our taxes, we report our taxable income and we report the amount of taxes that we paid over the course of that tax year. If we paid more taxes than we should have based on our taxable income, we'll receive that tax refund. So getting that tax refund means that you paid the government more than you should have. You're requesting to get that money back. So when you see people bragging about getting a big tax refund, that money is pretty much theirs to begin with, and they could have had that money over the course of the entire year and not get it in one lump sum payment in May or June or whenever their taxes are refunded back to them. With this thinking, it's essentially like giving a loan to the government, except this loan is interest free. What you're better off doing is keeping that money for yourself, holding it in a high interest savings account, generating interest on that income, and having it in your pocket instead of letting the government hold on to it for you interest free. For example, if you find yourself in a tax refund of $2,000, you're essentially giving the government an extra $166 a month. That's $166 that you could have had in your pocket to do whatever you wanted to with. So on the contrary, some people get upset when they find out that they had to pay taxes when they file their tax return, but that just means you kept more money than you should have, and now you're just squaring up with the government. So if you know that going into your tax year, you can use that money to put aside in some type of savings account, collect interest off that money, and then pay the government their share while you keep that interest income. If you find that you are paying more taxes than you need to, and your employer is withholding more taxes than they need to, in the US there's a form called a W-4 that you can fill out and adjust how much taxes your employer should be withholding from your paycheck. In Canada, it's called a TD-1. That's going to determine how much tax your employer is going to withhold from you from each paycheck. So if you find yourself getting too much of a refund, I would definitely encourage you to request another W-4 form or TD-1 form or whatever form is applicable for your country and make those adjustments on that form. So that's basically it. If you're happy with the government holding on to your money over the course of the year because maybe you're not disciplined enough with your finances, then that's great, all the power to you. But this video was just for educational purposes as to what getting a big tax refund means and what owing at the end of the year means. So that's all for today. If you liked this video or got value out of this video, please give it a thumbs up and please subscribe. Until next time, I'm Nick, I'm out, and happy taxing.